Good afternoon, Dr. Sitaraman.
Good afternoon.
We're going to talk on financial markets, global and regional today. How have global and regional capital markets done on YTD basis?
Well, the global market has taken a different spell with Fed tampering now really in action. We have seen the reflection. It has accepted. It has been factored already. It was coming. The question was when. Fed surprised by, starting in December. The reason why they have done is the economy has grown by 4.1% annualized. So that's commendable. But at the same time, there are other conditions attached to the overall financial stability: unemployment, consumer price, inflation, and again, the overall growth momentum, which should be sustainable. If these factors are measurable long term and they are in compliance, then the Fed program should be executed. So the beginning is on. 2014 gradually will come down. By end 2014, it will be cut down in total respects. That's QE will be out of the action. Now, if you look at the market reflection, as on date, S&P, Nasdaq, and Dow Jones, if you look at it, Dow Jones is 23% up, Nasdaq is 33% up, and again, when it comes to S&P, it is 27% up. Globally, if you see the reflection, Nikkei, with the open market operation, trillions of dollars of money market operations and printing liquidity, that has improved the market Nikkei to 52% year-to-date up. That's a huge reflection. India has grown by 5%, and we have seen Brazil is down still. The interest rate hike has taken place, but still the economy is struggling. We also seen UK has done 12%, Germany has done 23%, France has done 15%. So world over, there's a reflection, and China is picked up overall in terms of performance in the fourth quarter, and they see the market momentum getting rebuilt. When it comes to India, they're surprised by keeping the interest rate as it is without a hike, and the growth is a target, and they're watching the inflation very seriously, while the rest of the world, if you look at it, Japan is going to do 1.4% aggregate, and Europe is still reeling under pressure. That's what reflection we have seen in the capital market in terms of overall economic momentum.
How have GCC capital markets performed?
GCC capital market has taken a very solid aggregate. If you look at Qatar has done year-to-date 25%. Dubai has done over 100%. That's brilliant score. Year-to-date, if you look at the space in terms of Abu Dhabi, that's significant, over 50 to 60% in substance. When it comes to Kuwait, it's nearing 30%. When it comes to Saudi, 26%. Oman has done 18%. Bahrain has done 13%. So the market sentiments are very positive. They have seen Iran is coming to terms. Geopolitical risk is coming down. Reflection is seen, and the tapering has already been factored. So from here, the price will go up as far as the region is concerned.
What are the major trends in oil and gas prices?
Oil price, NewMax WTI $99 per barrel, and again, Brent is quoting 111. The gap is closing, and again, with the geopolitical tension getting de-risked, you will have more, the price stability as far as oil and gas is concerned. Now, we also have to factor the OPEC decision. OPEC is not going to cut down significantly. They want to keep the current prices intact so that the fiscal framework which they defined for government expenditure will be fulfilled. As far as gas is concerned, now winter is settling in. It is costing over $4.2 per MMBTU.
What are the major trends in precious metals?
Precious metals, gold has taken a dip. Now we have seen 1203, and similarly silver is also 19.4 per ounce. That's purely because the dollar is still weak. Dollar index has come down. The gold is not being substituted in real response to changing dynamics. Now we have seen the global growth coming up. The economic momentum in the US is visible. China is stable and functional. India is reorganizing its current account position. So the gold is still slowing down. There is a possibility it might go down further. And again, if there is no real sustainable recovery in the world, gold will bounce back. The currencies and commodities are intertwined, as you know.
What are the major trends in GCC bond market?
The bond market credit default swap is getting a right momentum. The GCC region has been considered now as a viable option for investments. MSCI upgrade is going to come on the stock side, equity side, and the bond market now, if you look at the credit default swap rate, Qatar, 60.5 basis points, and when it comes to Abu Dhabi, it is 56 basis points. Again, Saudi is 60 basis points. When it comes to Dubai, it is 215 basis points. Bahrain is 233 basis points. So all around, if you look at the reflection, the geopolitical tension has come down. The consumer confidence, investors' confidence have come. A very positive response for the overall risk definition for the region.
Okay, what are the major trends in forex market, you think?
Forex market is a reflection of, as you know, the Fed tapering. The dollar index is weakening. Unemployment numbers are still not in great momentum. The jobless claims have to reduce further, and unemployment should reach 6.5%. Then only the dollar index will get strengthened. As on date, it is 80.5. Dollar weakening has strengthened rest of the currencies. Japanese yen is 104.5 yen per $1. When it comes to British pounds, it is 1.63. When it comes to euro, it is 1.367. That's the reflection we have seen. Dollar is weakening, rest of the currencies are strengthening, but for, again, Japanese currency, which is weakening further.
Thank you, Dr. Sitaraman, for the financial markets and global and regional.